Hey guys, this one is specifically for YouTube, right? I've done several streams on TradingView. You can go through my profile and I'll explain this in a second and find obviously the most recent ones. I've had a few issues with the audio on YouTube, which is one of the reasons I haven't done as much on there. I still am not able to connect the YouTube and TradingView together where they stream simultaneously. So at the moment, my go-to kind of streaming preference is currently TradingView. Okay, so if obviously there's still issues with the audio, I do apologize for that. I'm still kind of using just my little laptop. I like the flexibility and the freedom rather than having kit in essence. I will pick up a mic if obviously it kind of persists. Then I'll obviously go and try to sort that out best I can. But I really like just the kind of using the laptop. I've tried to fix the volume inside the OBS, which is the software that I use for the streaming. So again, just let me know if there's anything on that, right? Right. With all that kind of done and said, what I want to do, I want to really kind of deep dive into Bitcoin, right? So this is something that I haven't kind of really done in terms of to the public. I know for you followers, you subscribers, um, you guys are going to know a lot of this, right? And you've obviously already gone through things like my book. You've already seen the subscriber only videos, etc., etc. So you kind of know almost what I'm about to say. But what I want to do is just go into a little bit more detail for you guys that don't, right? Now, even down to the naming convention of this particular video, I really wanted this to be the kind of eye opener, right? Now, if you don't understand, some of what I am talking about and the way that I talk about it, the first thing you really need to do is either come into Discord and start looking at the free education, or ultimately pick up the book, right? If you pick up the book, I'm going to cover a few of the chapters and a few kind of key points for myself right now. And then I'll go into obviously I'm saying why I suggest in terms of where we are with Bitcoin, what we're doing with Bitcoin, and my bigger picture, right? So this is completely different to what I normally do. This is a little bit more of a kind of an overview in terms of why I think we are where we are and what are the two or three likely scenarios from here, all right? So starting off with, right, before I go into the analysis, what I want to do, like I said, right, is if you guys don't know me and you guys don't follow me, then by all means follow me on TradingView, right? I do a lot of these streams, like I said, more frequent. But what I want to do is I want to start off by touching on the book, right? So obviously, if you do know me, I had a book published in May this year, right? It's called Master the Art of Trading. And what I want to do is just share a couple of key pages or a couple of key kind of points, right? So some of the things that I've done, some of the things I wrote about, some of the techniques and the strategies in terms of putting this together, right? It'll help understand what I talk about when I come then to the analysis, right? So in essence, first things first, right? If I go, I think it was page 20. I've actually wrote a list of this. This is not like me to do any kind of writing. So, first things first, right, is I love this particular quote. Now, the idea of paying attention to some of the detail, right, that a lot of people ignore. I know I've made some kind of jokey videos and I've actually kind of gone and put that out there in terms of, some of these clowns, some of these people that, either call for the moon on every single move. But the emphasis is real, right? The detail that a lot of the retail traders miss, it's very fine and very detailed in the detail, right? But I think a lot of moon boys, a lot of influencers, a lot of almost the true believers in terms of understanding, why Bitcoin can hit $1 million or $10 million if you listen to Plan B. The trouble being is the lack of the detail and the lack of the detailed explanation as to how it likely gets there, right? I know people have talked about things like this BlackRock ETF being trillions of dollars. If you go to BlackRock's website itself, it'll actually show, when you just type in ETFs or definition of ETFs right in the search kind of bar, and it'll talk about the the current instruments, the level of instruments, and the current level of funding across all of those instruments. Okay, so it was something like 1,400 instruments since 1993, with a whole market cap of $3 trillion, right? So BlackRock doesn't own all of these ETFs. They don't manage all of these ETFs. That's the whole ETF market, right? So if you assume BlackRock comes in with a Bitcoin ETF, it's not going to be anything comparable to even $3 trillion, right? Now, $3 trillion was probably the whole market cap for the whole of the crypto space, right, during its peak at 69,000K Bitcoin, right? So that kind of puts it into perspective. And these are some of the simple facts and some of the simple logic, right, that I really want to highlight and kind of pinpoint, right? Now, next page I've got marked as page 39, right? Now, this is something that I've taught in a couple of different ways, right? I actually done a Simpsons post on this, right? On this whole kind of mind game kind of scenario, right? Now, I've talked about composite man. This is the whole, Wyckoff kind of terminology. Richard and I actually described this in a really good way in terms of the market makers and knowing what the bigger players do, right? This is the kind of detail that the COT information can kind of provide. This gives you a glance into what's actually happening bigger picture, right? Now, the issue that you have is, this is all, like I said, in terms of trying to define what you're missing when you're only looking bullish, right? You've got all these kind of, hope, optimism, the thrill, the euphoria before it gets really kind of complex, right? And when I say complex, obviously from the complacency to the mixed feelings, it's an emotional roller coaster kind of in that move down. And what I've tried to do is to teach you guys, teach the audience, teach the masses in reality, in terms of how to spot when these things are likely to happen and kind of why. Again, this comes back to the COT data. This is knowing what composite man is trying to kind of to tell you really. And instead of then listening to these, these moon clowns, then ultimately, understanding why these moves are likely to occur with kind of logic back in every aspect up, right? This is what I've tried to cover, kind of time and time and time again, right? So instead of that, you could listen to some of these people. You've got someone like this, right? Just
Thoughts
listen to
on
this.
Casta? Well, Carl from the Moon is behind, so my thoughts can only be good. When someone like Carl from the Moon is in charge of a project like Casta, or even doing the marketing for them, helping them to getting more reach, then this is definitely something I can be bullish on.
Right? You can see by the chart behind the guy, right, how ridiculous these people sound, and yet they have millions of followers, right? The reality is when you're leveraging, 100x on every single dip from $69,000, right? You've lost your house twice, right? This is the kind of thing that people don't understand, right? And they seem to have memory like fish, right? It lasts about 2 seconds and then it's kind of on to the next shiny thing, right? So understanding in terms of the emotions, understanding that there are bear markets, there are kind of pullbacks. Don't listen to these influencers. Don't listen to these clowns. It's just going to serve you so much better, going into the next move. And the reason that I wanted to kind of put this video out here today is I really wanted to talk about what's next, because I think a lot of people get to a stage where they want to get involved in something, but at the moment they're fearful. Right? You're seeing a kind of a lull across this kind of Bitcoin market, the crypto market. Where are the NFTs gone? This is kind of all flashbang wallop, and ultimately it's kind of gone. What I see this period doing is kind of thrashing out the shit, right? This is actually a good thing for the market to see a pretty decent bull run, right? And again, I'll come on into the analysis in a second, right? So the next thing I wanted to cover is chapter 5 in my book, right? Is I talk about the strategy creation. I know, various people are different in terms of what they want to trade, how they want to trade. The one thing that I've emphasized to the students, to the subscribers, is having a longer term bias, right, is going to serve you even in a shorter term time frame. Because once you've got that larger scale bias, you've got that larger scale understanding of what the market's likely to do and why, it's a lot easier to create your strategies on a 15-minute time frame or a 4-hour time frame based on that much, much, much bigger picture, right? So then another page that I really liked, another thing, another quote. So what you have to remember, right, is all of the news is just basically happening to new people, right? Is I've said this 1,000 times. The reality is the news doesn't really impact the markets in the grand scheme of things. The markets are already doing, right, what they're designed to do, what they should be doing. The news almost becomes fuel for it because retail traders jump in on the back of that news, right? So it's kind of like if you look at a down move. I mean, Elon Musk buying Bitcoin, selling Bitcoin, right, was as a prime example. The price had already started its rally. News come out that the guy had actually gone and bought, X number of Bitcoin. Price rallies further. All of a sudden the price turns around and starts to drop, and then the news comes out that this guy has actually sold all his Bitcoin. So, when you understand these things, right, now this is why I'll go on to explain, little bits and snippets of this, right? I just wanted to share kind of a step by step into the logic and the thinking behind what I show on the charts next, right? So, next kind of quote, next page. This probably comes back to the whole optimism, right? And I think the whole kind of idea of how the market, the Wall Street cheat sheet, how that kind of plays itself out, is very clear, very apparent. And I'll show you now in a second on the charts as to how and why, this works, right? So what I'm going to do then is I'm going to go across to the charts, right? And I'm going to put, where are we to? Let's put this one on. I'm going to take this off and put this one on. So when I say, what's kind of apparent in terms of how it plays, why it plays, right? And this is why the bias is really kind of key, right? What I've actually gone and done on this, you'll see my symbol, right? I've actually gone and put a ton of symbols. This five, I think, altogether, right? This is how it's all written out, right? Divided by the five. So someone asked me a couple of days back, well, why I'm only using, Coinbase volume, why I'm only using, one set of volume, and then talking about the volume is that it's a little bit like COT data, right? It doesn't ever cover the whole market, but it's a big enough sample size to understand what goes on why, right? Coinbase has an advantage. Binance has a different advantage. They've all got their advantages, but they've all got their kind of drawbacks as well, right? So the reality is, regardless of what company, what exchange you're looking at, that's kind of almost irrelevant. The point being is you're actually looking for the sample size that kind of gives you these clues, right? So I've put that on, and I've then brought in this whole volume thing. Now, the trouble that I have is that prior to the move, because of I've mixed all of these up, I'm not getting the full amount of data, right? So I can share this back in a second. I'll go back to one of the regular views. But in essence, we all know, what happened, right? We kind of started down here with kind of nothing. We kind of, peaked on up to kind of 19K. We come back down, right? And then ultimately we rallied, properly, right? So when I talk about the market kind of growth, the market cycle, the whole Wall Street cheat sheet, right? And how how this thing was actually shown. Um, I guess the whole point for me, right? And this is where the institutional message comes in. This is where composite man and everything I've just covered in terms of my book, right? The reason that it all fits and the reason that it all works is that you can understand what the market's likely to do when you know full well what the market's done, right? Now, just think logically about that for a second, right? If you know what the market's done, you know what the market is trying to do, right? So I talked about some long positions right over here. I've got this post. I know again, if you follow me, you've already seen this probably 1,000 times. My posts in terms of taking along, I talked about this reaccumulation, right? Why this level was a reaccumulation. And this one's a really important one for me, right? This is why I've kind of harped on in terms of the message, this particular post. This is kind of key because what it actually did, right, kind of back at the time, this was, January 2021. What it actually done kind of back at the time, right, was it really give a kind of the first solid clue, right, that these bigger players were kind of in the market, right? This is the first, the first real play, the real, bit of momentum, right? This particular move, it really, it really started to set the wheels in motion in terms of the institutional involvement, right? So when I spotted this particular move and when I talked about this reaccumulation, right, I could see a couple of things, right? From the move down to the move up, look at the green volume, right? We had this nice increase in volume, right? Now, one thing that I get a lot of the time is people say to me, "Oh, look at the volume. It's a higher price compared to what it used to be, etc., etc." Right? If we look at some of the prices here, right, let's just take that peak of that volume there. We're talking about a high of 42k, right? And we're talking about a peak in the volume there at the 42k level. We have yet to see any kind of peak, right, with that ramp up in volume anywhere else. We had this mini little ramp, we had a drop down. We had a nice little cluster and a drop straight back. We had one spike and a drop back down, right? This is why the volume, is less important. It's less of an issue in terms of whatever exchange, whatever you're looking at. Ultimately, the point being is that it's not so much a lack of interest, right? It's how the volume is shown, how the volume is displayed, right? And ultimately how the big boys hide or display the volume that they generate, right? Now, again, I've talked about this in things like the dark pools and knowing that the sharks kind of exist in these dark pools, right? Now, I've actually got a really good post on that if you come into TradingView, right? So, in essence, right, when you start to, you start to understand what's actually going on, behind the scenes, right? What's actually happening, kind of why it's happening. You get to a point where you realize that the big players are manipulating these markets, right, in such a way that retail keep coming in, right? As I said in one of the quotes that I've just picked out in the book, is ultimately this is new people, right, having new or old news kind of dropped on them, right? So when you think about what happened during this kind of period, right, you had people like your postman, you had your friends in the pub, all saying, "Hey, have you heard about Bitcoin, etc., etc., etc." It's this rally that it fueled, right? Almost like too little, too late. Now, Composite Man knows this game is about to happen, right? Now, the one thing for me personally, what I loved about this is I posted that post about the reaccumulation, right? Now, what this allows us to do is take a fib extension level, right, from that, 0 to 19k and back down, basically seeing a 0, a 1, and a 2, right? What we were able to do from there is to just identify the next level 3, right? The pullback 4, giving us a move up 5, right? Now, this was obvious, one, with the fib extension levels, right? But two, what was actually happening. When I saw this reaccumulation and the fact that it happened, it just kind of reaffirmed the price was doing what it should be doing from an institutional point of view, right? This is the whole kind of ethos. This is the whole mentality in terms of, one, what I look at, and two, why I prefer trading more established instruments and tools, right? Aussie dollar is one of my favorite forex pairs, for example, gold, SPX. These types of things allow these types of moves to be identified very easily, right? Now, what I like with Bitcoin, what I liked at this particular point with Bitcoin, is that the extensions that worked, right, then brought us to the next level where we could see why we were dropping down, right? Now, this one here, right, I think I talked about this on the Rocket call. It was on the 18th of March, right? And I talked about, why down, why up, why down, why up, right? Why back down to this kind of key level. Now, if you look at where we were on the 18th of March, right? This was January, February, March the 8th, March the 15th. That's close enough there, right? If you look at where we were there, right? I'm talking about why a drop is inbound, why this is imminent, right? I talked about this, and a lot of people said, "Oh no, you're wrong. This is where we're off. This is what we're doing. We're not going to drop. We're off to the moon, etc., etc., etc." Right? And lo and behold, we had exactly what I said we'd have. Right? Why I wanted this move down to come back up before the real move down. Right? Now, seeing this play out wasn't just a, "Hey, look, I'm right again." Right? Although that was pretty cool. What it really showed is that the larger operators, right, these players were kind of live and well in this environment, right? Now, the one thing a lot of people missed, even a lot of Wyckofians missed, right, is that the AR move was perfect to the fib extension, right? Giving us basically the UT and a UTAD, right, up here for that drop down. Boom, down we went, right? As you can see, the low level there, down the lowest point there was 28,831, and this is part of the reason I had in here, look, the zone, right? The extensions were pretty much obvious, right? So what I'm going to do now is, before I kind of carry on to the next bit, right, I want to go back in terms of talking a little bit more of the next couple of pages that I've covered in the book, right? So one of the things that I like on, I think it's page 77, is understanding that these recessions are due, right? This is very timely in terms of calling for the drop from that 69k move down, right? Sorry, 65k. This was the first time, right? So understanding that this is coming, right, means that a lot of people that said to me, "No, you're wrong. It's only going to the moon. It's only going up, etc., etc., etc." This is the type of thing, right, that obviously was more than apparent, right? It was obvious. So seeing that people were saying, "Ah, we're off to the moon," kind of give me more confidence that no, we're coming down. Right? The fact that we've done it at a perfect extension level, based on then a Wyckofian type of distribution, it just kind of like mind blown the fact that these players were now operating in the Bitcoin market, right? Then, you know, this probably again kind of sums up really nice in terms of kind of what and why, and where a lot of new traders, right, what they tend to do is they jump in the market and they basically look at every single opportunity as an opportunity to trade, right? Now the issue that you have with trading every single opportunity is, in the long run, you end up overtrading, right? Now overtrading leads to more losses, and it's a vicious cycle, right? So with that being said, right, the reason that I've covered, and the reason I wanted to cover all of this from page by page almost in the book, is that I've gone into the detail as to why and how you can fix some of these things, right? Next page I've got is page 99. And this is again, right, where I'm going to lead into, I'm going to kind of stop on this one again in a second and go back to the charts, right, in terms of the next wave. And this will all become apparent, and this will all become logical, right, when I walk you through kind of each step, each swing, right? So this emotional analysis, right, is Wyckoff, Elliot, Dow. These guys weren't technical, right? They were emotional analysts, right? These guys knew what retail would be thinking, right? These guys knew that markets moved to catch retail out 9 times out of 10, right? Now, when I've just talked about the move down, right? And like I said to you, everybody said to me, you're wrong, up we go in, it's only to the moon, off we go, right? We were actually coming down, right? As we had this move down to that 28k level, we were in a position where the market itself was almost uncertain, right? So the market being uncertain, let me drop this down to a smaller time frame. Right? So the market now being uncertain, right? meant that we could look at the chart and say, well, it's not really uncertain. We know what we've done and we know where we've tagged. We've come down from that major high, 65k, at a perfect level. We've come on down. Let me just find where we are. We've come on down to this level. We've tagged the level for liquidity and we've grabbed that liquidity. Now, the next thing we have is we have this move up, right? So we come this move up. Now, personally, I didn't like this at all. Right? This was technically the 1. This was technically the 2. Right? We then had a move up 3. Right? We then had a move down 4. And a move up 5. Right? So, at this particular point, we were in this position where, as I said, I didn't like this move 1, 2. It was ugly, nothing really impulsive looking from the 0 to the 1. Right? Pullback 2 was very deep. But what we actually saw inside the move, right, was at this particular stage towards the top, we can actually start to see how the character was changing, right? And this is really interesting. We could start to see how the character was changing, right, in and around this level. Right? And I think it was the 18th for some reason. This was it might have been a little bit later. Actually, no, it was the 24th. There we go. So what we could see and what I could see on this particular point in time, right, was the fib extension was having its kind of final pullback before hitting the 1.618 fib extension, right? So we weren't quite there at this stage, which meant we were going to tap liquidity just above. I talked about this in, again, the same post, right? And this is this one here. And I talked about on the 24th, I talked about why we needed to come all the way back down to rally on it, right? And I then talked about why at this stage we were likely to see a 65k peeking into the liquidity of this particular high. And then we're likely to see 40k again very quick, right? So I covered that, right? And what did we do? Well, we went up, we tagged the liquidity. That was the 1618, right, from the low. We come on down, we create the 4. This is exactly the call, 3 to 4, right? And then ultimately from that 3 to 4 move, we had to move on up to the 65k level, right? Now this is where, for me, it gets really interesting. The 65k level, let me just put a mark on 65. I'll tell you why this was 65 in a second. Let me just put roughly, there we go, it's close enough. Right? As you can see, we literally peaked into 65, right? And then dropped straight below it. Now the idea that we got there, right, again, almost highlighted, right? It kind of confirmed for one, but highlighted for two, as to who was actually in control of this market, right? Why this market was doing what this market should be doing, right? The fact that we could call a truncated move from this point before going down to come back up, right, just highlights the fact that the bigger players are now operating in this space, right? And we've called it, we've talked about it, right? Now, at this particular point, we had people like Plan B saying, worst case scenario, 98k for November and 135k for December. Worst case scenario. And where did we end up at the end of December? The end of December, here you go. We ended up roughly the low 45k. Right? That's a 90k difference in a prediction. Right? How the hell is anyone following this guy? Why the hell is anyone following this guy? Right? The point being is, I'd gone and talked about why we would see 40k again very quick. Now, the reason I said 40k again very quick is if you look at this particular move down, right? What did we tag there? The low 41,900. The liquidity was definitely sitting down in this region. We tagged up high, we were coming down low, right? We go sideways for a redistribution, right? And I'll talk about this in a second. Go sideways for redistribution, carry on down, right? This was all clear as day, right? Being transparent, I'm showing, I'm showing what I've called, I'm showing how I've called what I've called, why I've called what I've called, right? Now, from that particular move, even here, look, I've taken the mick out of plan B, right? And actually, on that particular topic, what I want to do is I just want to share this as well, right? Because when I talk about the kind of the Muppets, I want to just highlight, right? I think at the time this was Plan B's prediction.
Over $1,200,200,000,000,000.
Right? So where we were kind of at the time, we dropped down to the 40k region, right? We'd gone across sideways. We'd kind of started then this kind of move in terms of the the redistribution, but this was only kind of step one, right? Now the fact that we hadn't closed or gone below 40k, right, meant that there was still going to be an awful lot of liquidity, right? So when we actually finally broke through this level right here, and we started to then test the underside of the same kind of range, right, it was clear to see that we were getting another larger distribution here, right? Now, again, this might not be obvious as to why here, right? And this is something that I've covered a little bit in detail in terms of in the book. I've gone and shown you the tactics and the strategies and the tools to to find these types of moves, right? What I then talked about was, do you know how to use a trend line break? Right. This was on the 24th of January, 22. So let me just come and move my little marker. This was the 24th there, right? Now, why would I say, do you know how to use these trend line breaks, right, on the 24th of January? Let me click on the link. The reason that I knew that this was coming, right, and this is a big reason, because you'll see this in other markets, in other forms, other locations, even on the Bitcoin chart, right? The reason that I knew this was coming was that we've just had the drop down to the 40k region. We've gone to test from the underside the 40k region. Now the point was, I'm talking about why we would go, as you can see from here, right, why we would go up, down, up, down, up, right? You got these kind of, almost a W with the tail, right, before the drop. When we see the move, we have this first move up, there's the tail, drop down, peak up, drop down, there's your W, right, drop through, and then we come through, right? That move through, it's a standard kind of pattern, right? This is again kind of almost a sloping kind of Wyckoff, right? It's a standard move, it's a standard practice. It's understanding why and how Composite Man can manipulate retail into thinking we're doing one of two things, right? Now, I've just shared with you Plan B's price prediction to $250 billion, right? As I've said before, and as I said at the start of this stream, I've said obviously about BlackRock's ETF. It all comes down to the money that's sitting in the market, right? The liquidity in the market, right? The profits for these big players sitting in the market. Right? Now, what we were seeing at this particular point is, I'm just cleaning up the chart as we go. What we were seeing here, right, is the drop down was pretty significant, pretty violent. The little kind of shelf that we sat on, right, I'm going to draw the bottom, this little shelf that we sat on, right, was then retested by the first peak of the W. We were then tested again at the second peak of the W. What do we do at the third peak of the W? We grab the liquidity and we drop one down, right? So again, nothing really complicated, nothing difficult, nothing, kind of exceptional in terms of being able to see, but it was something that allowed us to call this call, at the start of the break, right, as to what's coming next. So anyway, we get down to this drop, right? We get from this peak, and we start dropping down. Now, what do we start to see? A couple of key obvious things, right? And again, this is part of the reason I've kept the volume kind of profile on, right? We've actually started to see, as I said, with the top of the 60 odd K, right? We saw the change of character from the drop down. We saw the shelf, right? We saw technically the first kind of seller's climax, right, in the move. We saw a little ramp up in terms of the green volume, right? Now, this is enough to get retail super excited. Well, once retail is super excited, what do we then see? We see a drop off in volume. Right? What we then do is we come down and we take an SL. Right? This is the stop loss of all of the people that were following your Moon Carls, your MMC cryptos, your crypto rovers, your BitBoys, right? Taking the SL of all of these players. Everybody that was listening to Plan B, everybody that was listening to Moon Carl, everyone got stung, right? And this is kind of the beauty of it, right? You've got clowns like this talking about moves like that, right? And ultimately you get.
I'm the fundamental analysis king, and you're a technical analysis king. I think that's pretty much how it goes. And
right, you've got affiliate links, you've got shills, you've got YouTube watch time, right? This is where these guys, these scam artists, right? This is where these guys operate, right? They prey on the gullible, they prey on the noobs, right? And ultimately, they don't make money trading. Clearly, Bitboy recently has been fundraising for a legal case. The guy's supposedly a multi-billionaire with his crypto trading. And why he's trying to raise $100,000 for a legal case, right? Just understand that these guys are not there to help you, right? These guys are there to scam you, and trading's hard enough without these guys trying to do that, to you, right? In the grand scheme of things, we've now come down, right? We've seen this low. We've had the kind of the stop loss kind of sweep, right? But it's not all together, right? And this is where it's not quite finished, right? So what I'm going to do now is I'm going to go back in to another little page on the book, right? And I want to talk about the next part, right? So the next part for me is, let's go to page 109, is all of these fluctuations in the market, right? And all the various stocks should be studied as if they were the result of one man's operations. Let's call him the composite man, right? This guy sits behind the scenes and manipulates the stocks to your disadvantage. If you don't understand this game that he plays, right, you do not obviously profit by understanding this. Right? This is Richard Wyckoff's quote. This is his logic, his thinking, right? And personally, this is the biggest point that I've tried to emphasize to the subscribers, right? I've tried to put in terms of how to think and trade like a professional trader. When you overtrade, when you think too small, you think too small of a time frame, you think too small in terms of a profit, you think too small in terms of an instrument. It's very easy to get caught out and caught up on chasing your own tail, right? If you appreciate and understand that Composite Man and Co. is playing this game against you, right? There's professional money makers playing this game against you, right? These guys are not doctors or lawyers or accountants or engineers or software guys, tech guys. These guys are professional money makers, right? It's what we do for a living, right? So you might say, well, I'm a doctor. I've got a pretty decent IQ. Yeah, great in saving someone's life, right? In terms of making money, it's not your area of expertise. Right? You're not going to watch a Moon Carl video and come away with $1 trillion profit. Right? It doesn't work like that. You need to work at it. You need to understand, and you need to break it down, just like you did in terms of going through your PhD for your medical exams. Right? Trading is no different. So where we are now, right, and this is part of what the kind of the climax in terms of getting to what I wanted to show, is in the book I've talked about chapter 20, example scenario, putting it all together, right? Look at where we are, right? Now the one thing that I've done, and I didn't realize, actually one of my subscribers in Discord actually pointed this out to me. Most trading books that you read, they have examples of past events. They can use it in hindsight. They can talk about it in terms of, look, I call this move over there. What I've actually gone and done, right, without realizing I've gone and done this, I actually asked the publishers to put this example in based on what I think was about to happen. Now, the publisher's gone, and we've had this published. We've had the first edition published. It's gone out. It's on Amazon. It's on Waterstone. It's on W.H. Smith's, right? So it's gone all around the world. And I've gone and talked about the scenario that I think we're in, the scenario that I think we're at. Right? I've covered this in a lot of detail. Right? Where we are, where I think we are, what we're doing currently. Right? So I've gone into this level of detail. Right? Now, if I come back ultimately to the chart, what I've talked about in this scenario, right, is we've come on down. We've clearly had some kind of change of character. We've clearly had some kind of seller's climax. Right? We might have now seen an STB type move, right? And this is for me kind of the big question mark, is that this wasn't your STB because the schematic is too far down, right? So for me, this is the change of character. This potentially is the seller's climax followed by an AR, right? However, we could be seeing, right, the first drop, and this was the change of character leading to this being the seller's climax, right? We've had a little bit of volume ramping up, right? And as I showed earlier, nothing compared to the previous rally, right? Which makes me believe we're still a bit earlier in the accumulation phase, right? So I've covered in the book the example scenario where if we are looking at these two peaks in kind of down sell-off volume, right? I personally would say we have one of two things. I like this one a little bit more as the sell-off, right? So for me, this is what I would see as the potential for that rally, right? That kind of fuels the rally. The fact that we've gone up and come back down, right, would suggest that this could be an STB, right? I could be completely wrong, and this could be the seller's climax. Right? The main reason that I want to see this being drawn out, this being dragged out a little bit longer, right, is that everything that I've just gone and covered, and this is the reason that I've covered it, everything that I've just gone and covered, I've talked about in several of my posts, several of my streams, right? Almost kind of individually, right? I've talked about the BlackRock ETFs. I've talked about this one was ultimately the market cap, and obviously $3 trillion being, the crypto market cap, etc., etc. BlackRock then coming in with a different ETF, not being 3 trillion. Talked about the Wyckoff logic, in terms of this kind of individually. I've covered an awful lot of things, right, in and around this, right? And this is obviously all the posts. Go across to my streams, again, similar, right? I've covered individually in terms of, what's happening, some logic, some background, why the retail players are, usually wrong. I've really gone into a lot of detail, individual posts, right? So what I wanted to do with this particular video was, given that I hadn't done a proper YouTube video for a while, I really wanted to kind of summarize this, in a bigger picture right now. And this is why it's a long-winded video, but I really, really wanted to share this in terms of where we are, right? So I've gone in and covered obviously everything from the volume, everything from the data, right? Now, to finish off with, let me get rid of this volume and let me get rid of the stochastic, right? Actually, before I get rid of the stochastic, there's one thing that's probably worth highlighting still. Bigger picture, right? This is out on a monthly time frame, right? Now, out on that monthly time frame, there's one thing, if I can zoom in, there's one thing that's pretty obvious, right? And the obvious play there is that we are still quite high in the stochastic move with not much momentum to that upside, right? So we still have room to come down, right? So whether this is down for an STB, whether this is down for a spring type event, whether we don't get a spring and this is a kind of schematic 2 type of play. And again, if you don't understand what I'm talking about, go read the book. Come look at some free education, right? I'll put a link for the book up in the corner here. And what I'll also do is I'll put the link in the kind of the comment section or just below the video as well. So again, I've covered all of these kind of techniques and things in this book, right? What I've then gone and done, and what I'm then seeing, right, is that we are early in this accumulation phase. I've talked about it on a couple of other streams. I've had other people even, talk about me talking about this on other streams. I've actually gone and covered, right, what I see if this is bullish, right? What we could be seeing is a move, obviously the 0, 1, right, back down for the 2, up 3, 4, 5. This could be potentially larger scale 1. This is a larger scale 1. We've got a colossal 2. We've got a colossal 2, right? This is my preferred logic and rationale, right? I don't feel right now that this is impulsive enough for the start of a wave 3 move, right? Because you're going to want that to really shoot off. So the way that I'm seeing this right now is potentially we've seen a move A down, a move B back, a move C down, creating another kind of double bottom per se. And then I think we can get that kind of acceleration. COT data and so on kind of is supporting this theory an awful lot more, right? The reason that I don't see this as kind of done yet, the reason I don't think this is where we're at right now, the reason I don't see this as kind of bullish, regardless of what your plan Bs and your MMCs and so on are saying. So what you have to do is what I've done with the extensions, how I could spot the buyer's climax on the first move, how I could see the UTAD move on the second, why we were getting a truncated move, all of these good things, right? The reason that I could show all of this, right, was the fact that what we were doing and what we were seeing is nothing, nothing unexpected, right? If we now look at what we're doing from this particular move back down, right, this move being less impulsive means that it could easily be a B. If it's not a B, right, and you are going to go out and listen to some of these Muppets, right, what you're likely to see is a move now that looks something like this, right? So which means you're going to have to come back down for 2 anyway, right? You're going to see a 3. We're going to see probably a 4 touching the peak over here. We're going to see a 5 back up at this level, right? Now, the reason that I've actually got something like this kind of painted out, right? It's not me saying, oh, well, I think this and I think that. I'm actually trying to give you guys the logic supporting this type of move, right? Because if this is what you see, where's the forecast? If you see something like this, right, what we're actually seeing is a move 0 to 1. We're going to have to come back down 2 because we got the monthly, but let's just assume we come back down to the 20k level. Let's give it benefit of the doubt. We say 22k, right? We're going to see a 3 at 47. Right? You do tend to see that's 47, right? So that's kind of in this range, 3. You do tend to see the move 4 back down to the 1 range into the 0.618, right? So that's kind of the zone, right? Then you tend to see a 5 move up at the 2.618 extension, right? So with that being said, if you put all of this together, right, your logic looks like something like this, right? You're going to look at maybe a path, if I can find the path tool. You're going to look at a path that looks something like, here we go, path. Something like this. 0, 1, back down 2, up for 3, cross sideways for 4 because it's going to be different than the 2, ultimately truncated 5. We might extend a little bit higher, right? We might go just above these kinds of levels, right? The issue for me with that is that I don't believe this to be the bigger picture overall, right? I think this is too small of a play. So what I really want to see is sideways action before actually a decent move up, being a 3. Then we can take this as the 1, this as the 2, followed by a 3 extension, right, at the 1618 level, right, which let's just use these current levels in terms of where we are. What you're likely to see at that particular point is I'm going to start down at the 0, close enough to it. I'm going to come up 1, I'm going to pull back 2, right, and the same as I've just nested inside on the smaller time frame, we should therefore see a 1618 at the 125-ish kind of level, right? So, with that being said, what I'd really like to see is sideways action for a little bit longer, 1, 2, followed by a 3, right? Then ultimately pull back 4, and then obviously move up 5, right? So, I'm going to leave it like that for today, right? I know this one's a longer-winded one. I know I've covered, obviously, a lot in terms of what I've said with the book and so on and so on. But guys, it's really important, right? It's not just in terms of, hey, here's my affiliate link, go buy it. It's actually more of understanding what I talk about on these streams, right? Is going to help you understand when to enter these markets, why to enter these markets. And again, it's not just Bitcoin. Once you've got the know-how, you've got the skill set, you've got the knowledge, you can deploy this on any kind of instrument. All right. So again, thanks for watching, guys, and I will see you on the next stream. Cheers all.